Welcome to this week's Ag Week Market Extra with Randy Martinson, Martinson Ag. Randy, the trifecta really affecting the grains this week. Weather, trade concerns as well. The funds have really been liquidating a lot of their longs.
They haven't. I mean, right now it looks like the funds are telling the last person out shut the lights off as they go.
Yeah, right.
I mean, we've seen such a tremendous sell-off in this market, which is a little surprising. But weather has turned to be a lot friendlier than conducive to crop development than we anticipated. We figured we were going to see hot and dry continue. Well, rains came in, and most of the northern plains picking up really good rains. We're looking at the 6 to 10, calling for a little warmer temperatures now, which would be perfect to get a kind of a greenhouse effect, growing a little bit. And then you look at the funds, or the as far as the trade side, we really don't know what's going to happen there. But right now, the trade is anticipating a trade war, and not just with China, but also with Mexico, also with Canada and the EU.
At what point in time will the market already have it factored in, though, do you think?
Boy, you'd almost think that we're trying to get there now, because we're looking at a lot of these markets trading to lows that we haven't seen in a year. And so we've taken all the weather premium out of these markets. We still have most of the growing season to go through yet, and we could still see a lot of things that take place. So I think the trade is going to wait for the event to happen. Once the announcement comes out, we'll see a little bit of buy the fact type trade, maybe give us an opportunity to do some selling. Hopefully a weather scare can come in to help exaggerate that grains a little bit. But if we do see some sort of a trade war come into play, it's going to be a long, drawn-out summer.
We talked about the report, the USDA report from Tuesday in the TV show, but we want to talk online here a little bit about it as well. It was bullish, especially for corn, but fairly bullish for soybeans as well, with ending stock kind of being pulled down in both.
It was, and the nice thing is that we didn't, or not nice, you can however you look at it, but they did not change exports in either one. The demand came from domestic. It's going to be the crush side in soybeans. It's going to be ethanol for corn. So the increase in crush, because of the lower production in Argentina, is what's kind of carrying the soybeans, or at least helped it. But soybeans traded 10 cents higher the day of the report, fell back and finished steady, and we've been lower since.
Absolutely. And when we talk about the wheat market, there we actually saw maybe neutral to a little bit bearish numbers. U.S. numbers weren't too bad, but the world numbers are still very burdensome, aren't they?
They are. We did see a tweak with the old crop wheat. Exports dropped 10 million, which we knew was going to happen because of the end of the export marketing year. As far as new crop, we saw a little tweaking with the numbers. Exports increased because we think we're going to get more demand from Russia because of their poor production. But they're starting to get rain. Things are changing there too. So, and with our higher dollar, it's not a guarantee we'll get those exports.
This is not the big report. The big one comes at the end of the month on the 29th with the acreage report. And there's already talk of maybe corn and soybean acres being increased from the USDA March 31st numbers. Is that right?
That's right. We are seeing a lot, expecting to see more corn acres and more soybean acres and a little less spring wheat acres. And I guess I would kind of believe that. I would buy into that train of thought. Soybean, they're looking at close to 1 million more acres, and I can't remember the corn. I think it's like 750,000, somewhere in that area. So, yeah, that in itself will dampen the report that we saw in June from USDA, because, of course, production is going to be quite a bit higher.
And then let's add that to the fact that we've had these historically high crop ratings, and there's already talk of, okay, we had a 174 bushel per acre yield figured in the June report. So if you add extra acres and you add some extra bushels on, what does that do to the ending stocks figure? Do we get close to $2 billion on corn?
Very easily we could, especially if you start seeing that yield increase. It doesn't take long when you're adding a bushel or two onto 80 or 90 million acres planted. You build your production pretty fast and your stocks go up because you don't see your demand change that much. So yeah, we could be looking at stocks virtually being unchanged from 17 to 18, which would mean corn has probably run its course and not going to see much more strength. Soybeans, if we see any increase there, we're going to start going into the been seen before stocks estimate. And that's going to be bearish on the bean side.
So on the bean side, what, closer to 600? Is that what you're thinking for the ending stocks?
Some of the estimates are coming in between 585 and 625 right now.
And that would be assuming, what, a 50 bushel per acre yield, or what level?
About a 52.
52. Oh, wow.
And that's a big number when you look at it. And then another 1 million acres. That in itself adds, another, 4 billion bushels onto the crop. So, we do have a tendency, or right now we do have that concern that production is going to be large and our stocks are going to grow. And that is in itself helping to keep the beans from doing too much.
Wheat saw a little bump up in production, a little bump in ending stocks. The production, a lot of people, as we went through the season with these terrible crop ratings, have certainly thought that production number would go lower.
Oh, and I was one that thought we should see it go lower. But as you always, it's kind of the battle cry every year, just like we saw in spring wheat country last year. As soon as the combines got into the fields, yields were better than expected. And that's kind of what we're seeing in some of the regions in the winter wheat area. Yields are coming in a little bit better. It's going to be interesting. I mean, it wasn't a big bump. It was like 6 million bushels. So, I mean, it wasn't huge. But when you're anticipating a drop and you get an increase, that's negative.
In spring wheat, the ratings are much higher than a year ago, so we should be seeing better production there by a ways.
Yeah, we should be. I mean, right now, our stock or our crop was rated 70% good to excellent the last couple of weeks. The crop is looking pretty good, and right now, with the weather that's forecast, it should just continue to improve.
The fund position, we talked about that they've liquidated a lot of these long positions. Are they, in corn and soybeans especially, maybe even meal, how much have they pulled down those long positions? Are they flat yet?
I think when we see the report on Friday, I think it comes out Friday, we should see corn and soybean positions flat. With the selling that we've had this week, and they were holding small long positions up until into this week. I think they've gone flat in those two markets because of the weather, because of the trade. With wheat, I think they're already probably on the negative side or on the short side for Chicago. Kansas City, I think they're still long, but Minneapolis, I think they'd be short too.
So we've taken almost all the weather premium out of this market. Does that set up if you get, a little bit of a weather problem or this trade thing gets figured out, does that set up a really big potential for a rally or not?
I think it does. I mean, you can't go down every day, and then at some point we got to see this market see a little bit of a push again. So yeah, I do think if we can, once we get the trade issue figured out, or at least get a path that we're going to go down, and we see a little bit of a hiccup in weather, we could see these markets recover, 50%, maybe 2/3 of what we lost. But it's certainly, that's going to be the selling point for the producers need to be selling into that when that happens.
On the livestock side, the trade equation has already been kind of factored into the hogs. First of all, the tariffs are already there for China. As far as Mexico and Canada, we did have tariffs put on by Mexico, but we understand that the U.S. falls under the quota of 350,000 metric tons, and that'll take us, through fourth quarter?
Through fourth quarter, that's what kind of the indication is that we're basically still being able to ship quite a bit of pork to Mexico. We won't see anything happen until the fourth quarter, and at that point, maybe we can get some sort of a deal or something worked out. It sounds like NAFTA might be brought back out after we get done with the fall elections, and then we can maybe iron some things there. But so yeah, it's really, and I think that's kind of helped hogs kind of survive here a little bit. Yeah, especially when you're looking at good demand coming out of Mexico.
Right. Cash has really come on strong. Packers are actually out there looking for inventory. The numbers have gone down. Weights are going down too, I think.
Yeah, and just like in cattle, we're pulling the livestock ahead because the demand is so good, and even domestic demand's decent. Production numbers came out, at the same time with the grains, and they did cut the production a little bit for the beef side, and that was a little bit friendly, but we're still not seeing the cash follow through as much as we'd like to see in cattle.
In fact, USDA is estimating, even though we have bigger supply numbers, we're going to have bigger demand. So there's going to be this tug of war in both cattle and hogs because of that for a while, isn't there?
There will be, and it takes a while to build that. The hogs you can build up the herd, but I think we'll see a little bit slower activity with that. I think now at the end of June we'll see another hogs and pigs report, and we'll get an idea of where the production is going to fall, or at least and where farrowings are going to be going forward. So that's going to be an interesting number to watch to see the hog market.
Cattle market has recovered. Looks like the bottom is in there.
Well, you'd like to think so. The marketings have been going fairly well. I'm still believing that we're not going to see this wall of cattle come. It's been anticipated by the trade. Cash has done okay this week, but a lot of it isn't taking place. The FCE auction, there was nothing sold, as most are expecting higher prices. Packers got good margins. Box beefs are strong. So I think, we probably have seen short term a little bit of a bottom. We should seasonally be seeing the biggest increase or the biggest numbers of cattle coming now, and we're not seeing that.
Feedlots are pretty current, though, and so cash should be somewhat supported, and I don't think the boxes the value hasn't dropped as much as we anticipated.
Exactly. Feedlots are extremely current because of the premium that cash has carried to the futures. They've been pulling cattle ahead. So slaughter weights are lighter than expected, and we're also looking at the numbers not increasing as much. So yeah, I think we've moved through what we thought was going to be the wall of cattle already, and that's looking forward. It's pretty positive for the market.
Overall, I think the one word we can use to describe all the markets is volatile.
That's the best way to describe it. I mean, you know, going into this time frame, I mean, having no weather premium in a market in the middle of June is odd, especially for the grains. The cattle markets, to see them trade as wild as they have been, you know, there's so many outside forces that have been given this market direction on a day-to-day basis that I mean, it's hard to figure out what's going to happen during the day.
All right. Always appreciate your time. Thanks so much, Randy Martinson with Martinson Ag here with our Ag Week Market Extra.